Our next guest may be known for reality television, but she has made her mark as an entrepreneur while maintaining a tech venture capital. She's also prioritized making a way for minorities and women in business. And joining us now is Tanya Sam, featured on Bravo's Real Housewives of Atlanta and Director of Partnerships for Venture Capital Tech Square Labs. A lot to cover on this ground there, but in the tech space, there's been a lot of conversation about women and how we're not seeing the kind of progress that a lot of people had talked about 4 or 5 years ago. A lot of that seems to be on the VC side of the things because the investors are still men.
Yeah, so, one of these things is this is a huge problem, obviously, and it's an ongoing and evolving problem. It kind of spans the spectrum. We're seeing it all the way from VCs, very down to like our little girls who are now sort of slowly taking interest in moving more into STEM and technology and mathematics as well. So it's really, really broad, and we have to kind of give it all of our attention from the top to the bottom. When you look at investing in the VC world, we see that less than 10% of minorities, people of color, actually get VC and funding and investment. So this is something that, starting from the top, we work really hard to fix and change. Part of that for myself, I work in venture capital in Atlanta. We have a booming startup and technology ecosystem. So we try to attack that by being able to, write checks for these early founders, and also, as you trickle down the line, create programs that support minorities to help grow their businesses, scale technology companies as well. So it's kind of the spectrum of how you can really help and broach this problem.
Tanya, we showed your portfolio there of Tech Square Ventures.
Oh, great.
And I couldn't help but notice Coinbase in the portfolio.
Yeah.
We talk a lot about our crypto on our shows and the Bitcoin space, which of course has seen a lot of change in the last year from, all-time highs near 20,000, and then the price has really fallen. But what builders in this space tell you is, well, it's not about the price. We're building for the future, and it's about the companies we're making. Coinbase, obviously, I would say the best known consumer-facing Bitcoin company.
We were very happy to get into that.
Tell me about investing with Coinbase and what you see happening.
So Coinbase has been good. I mean, if you look at that industry as well, like it's we really try to focus on cybersecurity. It's such a big area. Also, cryptocurrency and the blockchain has been like the buzzwords across the past couple of years. So it's just being relevant and staying on top of that. Coinbase in particular, I feel like has been such a great leader for us, and we were really excited to kind of get into that round and learn a lot from that. And I think there's just a lot that will come out of this even further when you start looking at cryptocurrencies and where they're going to go. I think this is just the beginning, and blockchain is becoming kind of like the base of which we're building a lot of very secure transactions over. So
one of the questions Dan asked is about the exuberance that's been around some of these companies that have come to market, only to find that there is more downside on that front. Uber is the big one that we've been watching. And today we got a note out from Wedbush that talked about how this is a transformative company. And yet at the same time, the analyst, Dan Ives, said that he doesn't think ride sharing can be profitable. There are other areas of the business. What do you make about the sentiment that's around these companies that have been coming to market that were valued up more than $1 billion in the private sector?
Right, and I saw you asking the CEO of Beyond Meat's the same thing. Is this a lot of hype and hysteria, and what happens on the other side and the flip side? I think for a VC, like, we are always about our money returns, and that's the biggest part that we want back at it. I like to kind of flip it back to the other side and encourage people, because I think one of the things that this does for entrepreneurs or people who are seeking to be in entrepreneurship, it scares them off, right? And I understand there's sort of two sides of the coin. And what I really work to do is encourage people to found companies and build successful businesses. So I love that narrative, but at the same time, I know that we're all out here taking risks. And I think these are transformative companies that have changed our world in ways that, like, we could not have guessed for. I mean, Uber's a great example, Facebook and Google, and they're also getting kind of hammered right now with these privacy and cybersecurity concerns. But, the problem is they've had to scale and grow at such astronomically fast rates that at the same time, we've lost a little bit of trust in these companies over the past. And part of that is from VCs, because we're looking for returns, right? So we're like, grow, grow, grow. And now we've had to kind of pull back and be like, at what cost? So it's hard, and I really encourage founders to build these companies. At the same time, the founders need to be responsible and accountable for their growth and for scaling and for all these other concerns. Are they, financially responsible? Is privacy at risk? Is our meat going to be tainted?
The checklist gets longer.
The checklist gets longer and longer all the time. It's a hard place to be, and forming a company, it's a lonely, lonely ride.
Okay, well, we appreciate you highlighting some of the insights that you have being a VC. Tanya Sam joining us here on set.